Welcome back to Real Talk with Brian and Dan on 1150 AM KKNW. I'm Brian.
And I'm Dan.
Our next guest is Johnson Marshall of the Johnson Marshall Agency. Johnson began the Johnson Marshall Agency in 1999 after moving here from Edmonton, Alberta, Canada. Johnson built his agency from scratch, leveraging relationships in the mortgage industry. Johnson has enjoyed many successes and accolades in his career, including multiple Toppers Achievement Clubs, Legion of Leaders Designate, Commercial Elite Status, Certified Insurance Counselor, and four-time recipient of the Farmers Unsung Hero Award. For many years of leadership at Habitat for Humanity, Johnson is father of three and grandfather to one. When not working or occupying his life with all things kids, Johnson is an avid golfer athlete. Welcome to the show, Johnson.
Thanks. Nice to see you all.
Hey, we like to ask each of our guests to share a fond memory of the home they grew up in. What do you got?
I wasn't prepared for that question, so I'll tell you that I guess the fond part of the memory is that I grew up in a multi-generational home. So my grandfather lived with us, and we were a large family with 6 kids, and so just a lot of great family memories that way. A real privilege to grow up with my grandfather in the house, and we grew up in a neighborhood that was really cohesive. So as I grew up, those families really became my extended family, and still are to this day. But when I first read the question, I read it as what was my strongest childhood memory, and my strongest childhood memory is that I set fire to my own house when I was a kid.
Oh no!
So I burned the whole ground floor of my house when I was, I think I was 6 years old. So it's no small coincidence that I've ended up as an insurance agent as an adult.
You got an early education, huh?
Yeah. Now you say you burned it. What, did you light it up, or was it an accident?
It was an accident. Yeah. So we had this paper banner that ran across the whole basement that was from a party, where everybody drew these caricatures. And I don't know where my fascination with fire had come from, but I would go down and I'd light the corner of it and blow it out. And after I'd done this a couple of times, I thought I'd show off to my 4-year-old sister, and I took her down and I turned out the lights and I set it on fire and I let it burn a little longer for effect, and then realized I couldn't blow it out. And so here I had this piece of paper that went all the way around the entire basement.
Oh no!
Just lit the whole place up. You could see my house on fire from all over Vancouver.
Oh
wow! Wow, that is a first about
a
former arsonist turned insurance agent.
Terrible.
So Johnson, share with us insurance, and what is the Johnson Agency all about? Johnson Marshall Agency all about?
Well, we like to put a focus on. You'll hear a lot of this in the insurance business, but we like to try and put a focus on knowing our clients and understanding what their needs are. Insurance is something that has really been commodified over the years, and people have started to a greater and greater extent treat it as just something that you have to get the best price on, period. And what I really try to emphasize with people is that insurance is a large part of any household's budget. And as such, you want to spend those dollars wisely. It's not about getting the cheapest price. It's about getting the best value for what it is that you're spending all those dollars on. If you have a claim, you don't want to find out that you've got cheap insurance, or that you've cut a corner here or cut a corner there. And the only way to do that is to know your client, for your client to know you, to make sure that you're going through a proper evaluation of everything and selecting really what you need.
So one of the questions that comes up when we help a buyer buy a home and they obtain a mortgage, the lender requires that they have homeowners insurance. The question that I often hear is why is the coverage less than what they paid for the home? Can you expand on that for us?
It's the most common question I get as well. And the shortest answer is to simply say that you're buying a house and land, but you're insuring the house. So in my industry, for many years, home insurance was simply called fire insurance. And the whole purpose of it was, if the house catches fire, you want insurance in place to replace it. And most importantly, the bank wants insurance in place to replace it, right?
Right.
So your land does not burn up and go away. So how we arrive at the insured value of a home is we take all of the characteristics that are publicly available. So, the number of square feet, how many stories, how many bathrooms, quality of features, those sorts of things. And they all go into an appraisal program that's designed for the insurance industry. That is by and large the same as the appraisal program that's used for the real estate industry, except we don't include a factor for the land. Okay.
Well, that makes sense.
Yeah.
Now, there is another item that is often added there, and that's the earthquake insurance. Does everybody need that, or is it just people down in Southern California?
Well, that's a subjective question, but my informed decision is that everybody should have it. We live in the third highest rated catastrophic earthquake zone in the United States.
Wow, third?
Third, yep. So next to LA, and there's a place up in Anchorage, but they don't have the same sort of density that we have here. I've been in the insurance business for 21 years. I have never heard a professional speak on the matter of earthquake insurance that they haven't used the exact same phrase, every single one of them. And that is, it's not a question of if we're going to have a big earthquake here, it's simply a matter of when. And so, from my standpoint, everybody should have it. I like to tell my clients that insurance is about two things. It's about catastrophic loss. And yes, catastrophic is going to mean different things to different folks. But when it comes to a big earthquake, that's going to be catastrophic for everybody. And the second thing is that insurance is about sleeping at night. So that's where the subjectivity part of it comes into play. And that is that some people can put their heads down and say, I'm comfortable knowing that I don't have earthquake insurance. But the biggest thing that I find is that people make what I call non-decision decisions. So all insurance, it's not a very sexy thing. It's not like buying a new car. It's not like buying a new house. It's not like buying something new and exciting for yourself. And so when they are talked with about earthquake insurance, as often as not, people's reaction is to say, I'll think about that, I'll make a decision next year, those sorts of things. And what they don't realize is that they're making what I call a non-decision decision, because you've really decided not to do it. Instead of, making a decision, either you want it and need it, or you don't want it or don't need it.
So Johnson, when one of your insureds suffers a loss, what's the point where they should or should not file a claim, and why or why not?
Well, it's really all about math. Most of us have learned the hard way when we were younger that you don't want to file a claim for every little car accident ding that you have, because you file a claim for something small and your insurance goes up and it ends up costing you more than if you'd just gone out of pocket to take care of it. And that's really the truth of all insurance claims, is that you want to take a look at them and say, is this catastrophic? So as I said before, catastrophic means different things to different folks. I've had some folks that have had $30,000 losses and they've said, we can afford to take that, and they don't file that claim. I've had other folks that have had $800 losses and say, I just can't afford it. So they have to file the claim. So catastrophic is going to mean different things to different folks. But the most unpleasant conversations that you can have with people is when they file a claim and then they find out that that claim is costing them more in the long run. Right?
Wow.
So, my industry doesn't operate in a vacuum. There are all kinds of factors that go into determining how my industry works. But at the end of the day, it's all about profitability. We're in this business to make a profit. And bless you.
Thank you.
And, sometimes it's about how the market is returning. Sometimes it's a factor of how losses are aggregating for the industry. But there are times when my industry is more profitable and less profitable. And when we're less profitable, we have less of an appetite for risk. So you all in the real estate business will remember 2001. 2001 was a terrible year in the homeowners insurance market. And you'll remember that it became such a problem to get insurance on homes that they started to write it into the purchase and sale agreement that
Right, I remember that.
people had to have insurance in place before the purchase was finalized, right? Because it was torpedoing deals. Back at that time, I use as an example, I had a client that filed a claim with another company. They non-renewed him for filing the claim. He came to me, and the only carrier that we could get charged him thousands of dollars more a year, and he didn't have a choice. He had to take the insurance. So over the course of 3 years, it was in excess of $10,000 that one claim cost him.
Wow.
So that's an unpleasant conversation for anybody to have. So you always want to make sure that you understand the math of it, right?
Right.
That's right.
Now, another kind of surprise could be something that isn't covered. So what are some of the most common things that homeowners assumed is covered but wasn't?
Well, I'm going to choose my word carefully here, but when we have that big earthquake, that's going to be the single biggest thing that's not covered. I mean, most people don't carry earthquake insurance, and it's the biggest problem that I think that we have coming our way here. But independent of that, probably the single biggest thing that's not covered is water. All homeowners insurance policies are by and large the same. We're written off of the same skeleton, and then different companies will put little tweaks and little bells and whistles, but as a general rule, we all operate on the same structure. And so what you'll find is that you're covered for what's called sudden and accidental discharge of water. That means a pipe burst. And what you're not covered for are things like water intrusion or leaks. So it's a really common thing for somebody to call me up and say, hey, we were doing a remodel on the bathroom and we pulled the bathtub out and oh my gosh, there's all this rot underneath and I need to file a claim. My contractor tells me it's going to cost us $15,000 to fix this. A leak is something that's easily determined by examination because you'll see that the wood has rotted over an extended period of time, that there's discoloration to the wood and mold and all those sorts of things. Leaks, water coming in from a crack in the window or from a faulty roof, those are the things that are not covered, and I get those questions all the time.
Wow. What are the biggest changes you've been seeing since coming into the business?
My business is radically different from the day when I came into it. The things that people will be pretty familiar with is that there's been the introduction of the use of credit, and customers hate that. The insurance commissioner is not too keen on it, but it is one of, if not the single biggest predictor of loss in this industry, and this industry is about predicting loss. So that's a big one. The use of algorithms has changed it a lot, so that it's a lot harder to determine, where somebody's rate is going, because it used to be that it was tables, and I could literally and easily look at the table and say, well, okay, this factor is going to affect your rate this way. Nowadays, they're much more complex than that, so it's harder to predict the future for the client. And then the last thing is what I call the Geikification of the industry. And I sort of talked about this before. It's being beaten into everybody's head all the time that, give us 15 minutes and we'll save you 15%. But when I take a look at those policies, I see sacrifices and reductions in coverage that people didn't even realize that they were making. And to their peril. Those are short-term gains and long-term losses.
Johnson, tell our listeners and viewers how to reach you.
I have the world's easiest telephone number. It's 425-990-9999. So you can reach me there anytime that you need. You can also reach me by email. It's JM for Johnson Marshall at insmatters.com. That's JM at insmatters.com.
Johnson, thank you for coming on the show today. Really appreciate your insights.
Great to join you guys. Thanks so much.
Remember that all the segments of our show are available to watch on our YouTube channel. If you're interested in learning more about any of our guests, please subscribe. Join us after the short break for some final thoughts and something fun to do. We'll be right back.